Hi, Assalamualaikum everyone. Okay, in this video, I will continue the discussion on statement of cash flow. Okay, let's take a look at this format. Okay, can you see here we have a presentation of statement of cash flow using direct method. Okay, so as I have mentioned in the previous video, statement of cash flow will be divided into three activities: operating, investing, and financing. Okay, so this is direct method and this is indirect method. So what is the difference between direct method and indirect method? Remember, the difference is only under cash flow from operating activities. So for this direct method, cash flow from operating activities will show exactly the item of how much cash received from customer, cash payment to supplier, cash payment to employees, and cash payment for other expenses. Okay, so you will get this after that this amount cash generated from operations. However, if it is indirect method, okay, can you see here for indirect method? Okay, we will start this statement of cash flow with net profit before tax. Okay, I highlight before because some of the students they confuse and then they even show as net profit after tax. Okay, but bear in mind it must be net profit before tax. And then you are going to do adjustment. So these are the adjustment for items in the SOPL, which is expenses or income. What you need to do, you will reverse what you have been doing in SOPL. If let's say depreciation is being deducted in SOPL, so you will add back the depreciation. So you are kind of like working backward in this statement of cash flow. Then after that, you will get operating profit before working capital changes. After that, you need to show changes in working capital. The most famous three different item that you will show here is actually trade receivable, trade payables, and inventory. And after that, you will get cash generated from operations. Okay, this item in yellow is actually similar like the item in this direct method, cash generated from operation. So I would say that this is the item where the starting point where item after that in the statement of cash flow, both indirect in when it is prepared under direct method or indirect method will be the same item. Okay, so only item before cash generated from operation is actually makes the difference between direct and indirect method. Okay, don't forget that you must always show in bracket if it is cash outflow. Okay, and then if it is cash inflow, okay, you just show the figures. Okay, so this is the last part of the statement of cash flow. Yeah, you have to show net increase or decrease in cash and cash equivalent. Then cash and cash equivalent at the beginning, then cash and cash equivalent at the end. So, okay, most of the time, if in that question you can find that cash and cash equivalent item is more than one, I advise the student to prepare this note. This is actually notes showing cash and cash equivalent. So example of cash, as we have discussed, cash in hand, cash at bank, and bank overdraft. Example of cash equivalents is short-term investment. So bear in mind, if you can see here, bank overdraft is negative. So please do not add bank overdraft into this this column. So you have to deduct bank overdraft. Then you will get how much is cash and cash equivalent at the beginning. You need to compare with how much is cash and cash equivalent at the end. Okay, so if let's say company choose to prepare the statement of cash flow using direct method, normally what you will do, the company need to do reconciliation of cash flow from operation. So reconciliation basically the item here is similar with this cash flow from operating activities in the statement of cash flow prepared using indirect method. So this is the format. Okay, I would like to show you after that you have to basically prepare workings. So when you prepare your answer, make sure you always show your workings. Okay, these are the workings shown as in format T accounts. So it will be so much easier for you to identify whether it's an increase or decrease when you prepare statement of cash flow. Okay, so okay, I would like to explain again, explain about this situation. Okay, when you compare beginning and ending, there will be either increase or decrease in cash and cash equivalent. Okay, let's take a look at uh, this diagram. So can you see here we have 0, then on the right side is a positive figure, and on the left side it's a negative figure. So I would like to show you, if you compare the amount of beginning and ending, you have to identify whether the amount is going to the right or going to the left. So if it is going to the right, showing that there is an increase in cash and cash equivalent. However, if the amount is actually beginning, when you look at the beginning amount and then it goes to the left, so it shows a decrease in cash and cash equivalent. Okay, let's take a look at this first box here. So from 5,000 to 10,000, this is quite simple, quite easy, because it's a positive figure. Definitely, you know that if it is from 5,000 to 10,000, it's a positive, it's an increase. Okay, however, oppositely, if it is from 20,000 to 15,000, it is negative here. Negative is a decrease. So you can see from this diagram just now, if it is 5 to 10, meaning it is moving to the right. Okay, moving to the right. However, if it is from 20 and then it moved to 15,000, it is moving to the left. So this shows a negative or decrease in cash and cash equivalent. Okay, this is if the amount is positive. How about if the amount is both negative? So if both negative, the principle is quite similar. If it is negative 25, you can see in this diagram negative 25, and then it moved to negative 15,000 at the end. So negative 25 is the cash and cash equivalent at the beginning. Negative 15,000 is cash and cash equivalent at the end. So it moved to the right. So if it is moved to the right, it is an increase. Okay, move to the right, it's an increase. However, if it is moving to the left, like in this situation, negative 5,000 to negative 10,000, so it is moving to the left. So it is a decrease, or it is a negative 5,000. I'm sure that you don't have any problem with this. Okay, let's take a look at another situation. If it is from negative, if it is from negative, you know that is from this side, negative 5,000 to 10,000. So it is moving to the right as well. Okay, moving to the right. So it is a positive 15,000. 15,000, not 5,000. Okay, from negative 5,000 to 10,000 is a positive 15,000, as you can see in this table. And finally, the last situation, from positive to negative, definitely you know that it is moving to the left. Okay, if it is moving to the left, it shows that it is a negative. But 20,000 positive to 15,000 negative is the ending amount is not negative 5, but it is negative 35,000. Okay, so these are the situation what happened when you are comparing beginning, cash and cash equivalent at the beginning, and cash and cash equivalent at the end. I hope that you can understand this situation. Thank you very much for listening. See you all in the next video.